I think that's got a lot to do with why the stock price is moving up.
Our MarketBeat analysts Chris Markoch and Thomas Hughes are here to join us to walk through what's behind this boost in Palantir stock, even during this difficult week in the market. Chris, let's start with you. Let's talk about some of the main highlights that you're finding from Palantir's earnings report today.
Well, it was a great earnings report for Palantir by almost any measure that you can consider. So let's just start on the top line. So revenue was came in at $678 million. That beat analysts' expectations by about 4%, 3.9, I think it was. But it was also 27% higher year over year. And that revenue that they're getting is not only coming from their government contracts, which was up about 24%, but it was also coming from the commercial side of the business, which has been where analysts have wanted to make sure the growth was coming from, and that grew by 55%. Some other notable things is the company closed 27 deals valued at over $10 million. Their customer count increased by 41% in the quarter. And the company delivered another profitable quarter of 9 cents per share. That was beating expectations by only a cent. But what was notable was that they were at a penny a share just the year prior. So that's tremendous earnings growth in 1 year. And then just as sort of the cherry on top, they also raised guidance for both revenue and earnings, not only for the coming quarter, but also for the rest of the year.
For sure, a lot going on for Palantir right now. We're excited to watch this one. Thomas, do you think Palantir's revenue report justifies this near $30 stock price that we're seeing right now?
Yeah, I think I do. It's a pretty good report. I agree with Chris on everything that he said. One of the things that he didn't touch on is that the company is building momentum. All right, revenue and profitability growth accelerated sequentially and year over year. So it's not just doing well, it's doing better sequentially and on year over year basis. And the guidance and the other internal metrics suggest that will continue to go. Like you said, commercial and government sides of the business are both firing. One thing that the company itself pointed out was the rule of 40, and that's just a rule of thumb, kind of a metric to see how profitable the growth is and how investable the stock is. And the rule of 40 is that the growth rate plus the profit margin should be at least 40%. Their rule of 40 number is 64%. 50% better than the expectation. I think that's a good metric. I think that's got a lot to do with why the stock price is moving up.